Okay, so we have to talk about this one asset. Now look, these videos are to help people retire strong. There's something that happened in September of last year that the farther we move away from September, the clearer the markets, like all markets around the world, are reacting to it. So what I want to talk about is what that is and how it's affecting markets. Specifically, we're going to look at kind of three different parts of the market. So I want to jump over to price charts so we can jump into this. Okay, so the symbol I want to talk about, the investment I want to talk about, is the US dollar. If you look at this screen, this is 25 years of data. I have my little gray line. Let me move this. That's that gray line where it is right now. The horizontal gray line is where the US dollar peaked in September of last year. Now, if you've watched my videos, I talked about how I thought the dollar was going to go to 120. It didn't. It stopped at 114. And it has really reversed. And this reversal from 114 to, let's just call it 102 today, is really changing a lot of things in the entire investment, really, landscape. So we have to look at that. Now, I was waiting to also see if it would kind of bounce off the 104 range. And if you kind of look here, again, we're looking at a 25-year. The dollar has not bounced off of 104. It's actually below that 102. It still can bounce. I'll zoom in after this. This is a really zoomed out price chart. But what we're seeing is the dollar stopped going up. Now, why this matters. When people are really, really worried, regardless of where they live in the world, collectively, the dollar is a place where people move when they're super scared. Now, they're not moving into that anymore. It might partially because people are moving into the Japanese yen now. So there's another kind of safe haven place. But what we know is people are not moving into the dollar in the same way. In fact, they're moving out of it and they're moving into other parts. They could be moving into the euro. They could be moving into the Japanese yen. The point is, this huge flood and this huge push into the dollar, I say, is over. Why this is important. If you look on the screen here, or if you're listening to this just on audio, the dollar peaked in March of 2020. So we had the COVID crash. It lasted 30 calendar days, 20-ish trading days. And the dollar spiked. And then it fell from, just easy math, let's just call it, from March into the end of the year. So it fell for, 9 months? And the dollar now has broken down, kind of broken support and is moving down. So I want to look at three different symbols, how this dollar falling is really affecting not everything, but almost everything. So the first thing I want to show you is I want to show you a price chart of the US dollar, which is the top price chart. And the bottom price chart is emerging markets. So where the dollar peaked in the COVID bottom, right, the dollar fell, and it fell, let's call it 9, 10 straight months. During that same time period, emerging markets went straight up. Now look, most things went straight up after the COVID bottom, but we're looking at this all relative to the US dollar spiking and peaking and then falling for that time period. Really, maybe I'll just say for 11 or 12 months, just for kind of a general thing. So during that time period, emerging markets, they went up 92%. Now, I think we're in a similar phase right now where parts of the world that have been really beaten up, that did not go up like the S&P went up until January 1st of last year, but really hurt. So emerging markets, since the dollar has peaked, let's just do that. Emerging markets themselves are up about 19%. So let's just remember some numbers. Emerging markets are up about 19% since the dollar peaked. Okay, the next thing I want to show you is just international. So if you blink, you might not have noticed they've changed price charts, but the below price chart is now EFA, which is a symbol that tracks Europe, Far East, and Australia, which is basically the international stock market. Now, from COVID bottom to that same spot, it didn't really go up all that much to the exact same spot where emerging markets went up 92%. But if you go to where EFA did go up, it went up about 84%. Okay, I'm just giving some reference here. Since the dollar peaked last September, EFA is up 25%. So let's just write down 25%. So we have emerging markets up 19% since the dollar not just stopped going up, but is really falling. And we have international itself, which the biggest part of international is Europe. So that's up 25%. So both are equities. And the last thing I want to point out is just gold. Now, gold's a little different because it really, really spiked when COVID bottomed. Or what we're talking about here, where the US dollar spiked and stopped going up. So gold had a huge, fast, steep run. Gold from the COVID bottom to where it spiked went up 40%. Now, here's the thing. It went up 40%. Not the previous two was 1, 2, 3, 4. Went up 40% in 4 months, which is pretty remarkable. It went up to $2,040. That's what gold went up to. And then gold tried to break above $2,040 again in 22, but it couldn't. So now gold's on the move again. And if we go where the dollar stopped falling, gold itself is up about 17%, which if we look at it relative to emerging markets and international EFA, doesn't sound like that big a deal. But there's different ways to play gold. So you could play gold through just buying GLD, which again is up 17%. But I'm talking about this in the framing that gold really spiked and gold is really moving right now. And I think what's nice about gold is it has a defined outcome. It looks like it's going back to its $2,040 high, which is a pretty good place to test again because it had a double top. So it looks like it wants to go back to that 2040 again, which means the upside from the recording of this is about another 9%. That's not that necessarily exciting. What is more interesting and exciting is what GDX did. In that 4 months, when gold went up 17%, which is, again, not that big a deal, GDX itself went up 130% in 4 months. This time when when the dollar peaked last September and now has been falling, GDX right now is up 50%. GDX is a precious metal mining symbol, so it's up 50%. It's very likely it's going to want to try to go back up to its 2020 high, which it's a range somewhere between $40 and $42. So from where it is today, just say that's another 30%. Now, I don't do trading on these videos. I'm simply kind of giving a view of what's going on and what I see happening, which maybe most people aren't talking about. I'm sure people are talking about other things that are going on in the market. You don't need to get that here. But what I see happening is that the US dollar has peaked. Hold on a second, everyone. The US dollar has peaked, and this is having global impacts on all asset classes. I showed you really just 2 asset classes. I showed you emerging market stocks and international stocks. International is doing much better because it has a much heavier weighting to Europe, and Europe's on a tear right now. But the biggest impact that this dollar reversal is having is on precious metal mining shares, which again, last time they absolutely skyrocketed higher, and I see that happening right now. Now, the point of these videos is to help people retire strong and make sure they stay retired strong. One doesn't have to be in precious metals, right? But what the dollar does, it affects everyone. It affects what happens with bonds. It affects what happens with precious metals, with commodities, with real estate, with international, with domestic stocks. And the falling of the US dollar right now is having probably the biggest impact on precious metal mining shares across the world. In order to retire strong, one has to make sure their money is absolutely aligned with what's happening. So whether someone buys precious metal mining shares or not, they really want to take a look at what they own. And if you've watched my videos for any amount of time, you know that I believe that 60-40 or that the 60-40, 60 stock, 40 bond is not a strategy that is going to help people get through the 2020s. And you want to be in a strategy where you align your money to what the market is doing. And that's what these videos are about. Thank you for being in my world. I appreciate it. Appreciate you watching and listening to these videos. Let me know where you think I got it right, where you think I got it wrong. When you like, subscribe, and leave a comment, it helps the algorithm get this video out in front of more people, which I would love if you would do that. I will keep doing these videos either way, but just go ahead and click, and subscribe because it does make a difference. Thanks everybody for being in my world, and I will see you on the next video. Okay, bye.